Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. Okay, jobs report Friday. So the number will be out in about an hour and a half at 7 o'clock in the morning here on the East Coast. A little bit of a down day yesterday. So I did the webcast and then, then everything broke loose in both directions. The first thing that happened was the ECB did the rate cut. We popped up to 74.5. I had 62 halves long. I got out of those up there. And then, between the ECB rate cut, the GDP beat, which wasn't really good for the taper, and Twitter, I think, that confluence of events, we were done, okay? The problem with ECB rate cuts is they come with a press conference. And when that guy gets up there and starts talking, any power that the rate cut may have had starts to diminish rapidly. Because when he says things like the fundamentals of Europe are the best in the world, it's completely delusional and we go down. So you've got to remember that. It's not like, we're all watching Squawk Box one morning and bam, the Fed cuts rates, a quarter of a point or a half a point and we take off, like a rocket ship. Because back then it would just be the rate cut and that was it. It was just the news and then it backed away and everybody else was left to figure out their own conclusions. The problem with Europe is they do it and then they come out and talk about it. And they talk about their conclusions and you find out that their conclusions maybe aren't so good. So we broke 68, which was big. We broke 62, which was huge. The minute we broke 62, we just pretty much cascaded down. And where did we land? Lo and behold, the middle band on the daily. And now we're seeing a little bit of a battle back. And I'll tell you guys what I told my subscribers last night. Despite their day yesterday, which was violent and scary, and we moved lower, and if you try to catch the bottom, you got dinged a little bit. The Bears have not done enough at all. And if they leave it like this, they're going to get their heads ripped off again. Because all this is a move down to the middle band and a bounce so far. There must be bearish follow through today. Whether jobs is a catalyst for that, that's the first obvious catalyst, so be it. But the middle band needs to get taken out. It needs to get closed below. That's closing below the green line here. Let me tighten up. The Bears need to close below the green line. Or yesterday was just, a one-off. Do I think they'll push lower? I do. Yesterday was a pretty violent sell-off. Unless jobs comes out and the reaction to it is really, really positive. And the danger now is, don't game the jobs report. The danger now is if we get a really lousy jobs report, you can make the argument that that's good for the market and we're going to go up because it puts off the taper indefinitely. If we get a really bad jobs report, maybe that's really bad for the market. Maybe it's really bad for the market, or maybe the market does what it usually used to do, which is go down. The point I'm trying to make is, if I sound confused, I should be confused because none of us out here pushes enough around to be able to create a reaction to the jobs report. So get out of the way. Let them produce the reaction. You figure out the range, and we go from there. We have triple pivots at 53.83, 17.53.83. A pop that can't get through that area should be looked at pretty hard with respect to a short entry. The inability on any move lower to get through the middle band or to get through yesterday's low should be looked at as a buying opportunity. The point is we got a very big piece of news and nobody knows what the reaction is going to be, so get out of the way and see what they want to do with it. Okay, Everybody have a fantastic day. Follow us on Twitter, Princeton Trader. Check out the website. Check out the chat room. Have a fantastic weekend. I will be back Monday morning with another webcast. Trade them well, everybody.